Good morning, Trinidad and Tobago, and welcome to the Bourse Report. This week, we continue with our second installment in a three-part series aimed at helping investors better position their portfolios to meet their financial needs. Having looked at the moderate investor profile last week, today we focus on the conservative investor profile. The conservative investor's portfolio type may be an especially useful one in light of the considerable volatility and uncertainty pervading both local and international markets at present. So just what are the conservative investor's investment goals? The investor's main objectives is preservation of capital and income generation with limited focus on capital appreciation. Understandably, the conservative investor's risk tolerance is lower than that of both the moderate and aggressive investor portfolio types, willing to sacrifice the opportunity to earn greater returns in favor of safety. The financial needs, level of investment experience, and investment time horizon may all vary widely for the conservative investor, depending on life stage, earnings potential, and other factors. Now that we have a better understanding of the profile of the conservative investor, let's take a look at the possible asset allocation of this portfolio. And we're having some technical difficulties with the graphs, so you can view all our full graphics at www.bourseinvestment.com. The allocation of the conservative portfolio should reflect a low level of risk tolerance. As such, fixed income and money market instruments should play a key role in the success of the conservative investor's portfolio. A typical portfolio allocation would look something like 15% allocated to equities, about 55% to fixed income, and about 25 to 30% to cash and money market instruments. Because equity investments are normally riskier than bonds and other instruments, the conservative portfolio limits its allocation to just 15%, with perhaps 5% each being allocated to emerging market, developed market, and regional and local equity markets. The fixed income or bond component, being the largest or 55% in total, might ideally be split into 45% US dollar bonds and 10% TT dollar bonds. In the current uncertain TT dollar interest rate environment, however, we may consider reducing our allocation to TT dollar bonds in favor of TT dollar money market instruments until such time as fixed income provides, in TT dollars, positive inflation-adjusted returns. Finally, the conservative portfolio allocates about 25% to money market instruments and similar income-generating, capital-preserving securities. A useful investment option for the conservative investor would be retirement funds as part of his or her portfolio. Retirement funds typically adopt a long-term investing approach with a bias towards fixed income and other instruments focused on generating interest income and preserving capital. Now that we've seen what a conservative portfolio might look like, how did such a portfolio fare over the past several years in terms of returns? Well, when comparing the returns of a conservative portfolio in terms of simply storing wealth in a savings account, the results are broadly favorable. The period 2010 to 2014 saw returns for the conservative portfolio ranging from 4 to 12%, while the savings rate would have ranged from just 0.2% to 0.36%. Although 2015 did deliver a negative return of 3.3% for the conservative portfolio, the investor would still have been better off in the medium term by holding a diversified portfolio of securities. To put it in some context, $1 million invested in a conservative portfolio at the start of 2010 would be worth $1.34 million at the end of 2015. Using the savings approach, the same $1 million at the start of 2010 would be worth around $1.03 million at the end of 2015, a difference of about 30% in returns or $300,000. Locally, individual investors face several challenges when building their portfolio, including access to US dollars, managing their portfolio risk, and selecting and allocating assets to put into their portfolios. While simply placing money in the bank may seem like a safer and usually simpler approach, saving as opposed to investing forgoes opportunities to grow your wealth. With the help of an established investment advisor like Bourse, the investment process becomes a relatively easy portfolio construction approach, making portfolio building essentially a non-issue. The main challenge then remains access to hard currency or US dollars. For those of you who have already built up your US savings, there exist considerable opportunities to build a conservative portfolio or any other type of portfolio as the markets continue to trend downwards as they have been doing recently. To sum up then, the conservative investor's portfolio strategy, the conservative investor's portfolio should focus on higher holdings of fixed income and lower holdings of equities, more investment in money market instruments such as money market mutual funds, and generally lower risk type investments. That's all for this week's edition. For more information, give us a call at 628-9100, email us at invest@boursefinancial.com, or visit our website at www.bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.